Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES found responsive sellers at yesterday's initial resistance zone, and from that point on, it has been balancing within a range. So at this point, we had yesterday where the market was extremely balanced, and now we've had a very balanced overnight session as well. And the market typically will not remain in a very balanced state, and usually this kind of price action leads to directional movement. So keep that idea in mind. How the market resolves the range from yesterday and the overnight session is really going to help set the bias and tone on the day. Heading into the open, we have pre-market support at 40.5 to 41.5. So we have the high volume node at 40.5 within that zone, and yesterday's VPOC at 41. And many times these key high volume nodes can end up being launching points of directional movement. So we'll keep an eye on how the market reacts to 40.5 to 41.5 with that idea in mind. On the downside, we have support at 34 quarter, 36.75, and on the upside, resistance at 47.5 to 49.5. A breakdown below the initial support zone would indicate sell side in control, and that would mark a short-term balance breakdown, which could lead to a move into the 25 to 27.5 support and possibly the 19 quarter to 21 quarter. And by the time it gets to 19 quarter or 21 quarter, the market would be quite exhausted. So that's an area where responsive buyers can be active. But even at 25, 27.5 on first test, we can get a reaction. And depending on how weak or strong the market is, possibly even a reversal. But heading into it, the sell side would be in firm control. So that's something we'll have to gauge in real time to see whether the market is extremely weak and setting up to be a trend down type move, or whether the market's heading down into 25, 27.5 with perhaps not quite as much momentum as one would expect. And in that case, you can get a bigger move off of it. Otherwise, 19 quarter, 21 quarter is very much within range. On the upside, a breakout above 47.5 to 49.5 would confirm the buy side in control and bring the 57 to 59.5 resistance into play. Now we have minor resistance levels along the way at 52.5 and 55.5, and these can be perhaps small pause points along the way, but unlikely to reverse any upside breakout. As long as it's on decent momentum, it would be very unlikely to reverse. So as long as we're getting decent momentum to the upside, above 47.5 to 49.5, then 57 to 59.5 would be the high odds target, with potential to tag the naked VPOC at 63 quarter and even test 64 to 66.5. And by that point in time, you're getting pretty exhausted. So that's a spot where sell side can be more active. And then beyond that, we have a high volume node of 69.75 and resistance of 70.5, 72.5, which is high odds resistance and high probability that sellers would be active there on first test. So that's really how the context is set up at the moment. The market is in a very balanced state, and that's why our short-term directional bias is neutral. We're open to a directional move either way, either a break below initial support or a breakout above initial resistance. Holding above pre-market support, the 40.5 to 41.5, tells us that the buy side still has a little bit more edge, but we are flexible today on our bias and open to a break in either direction. The important thing is that whichever way the market breaks, as long as there is participation from the other markets and decent momentum behind the move, then you want to position yourself in the direction of that break and really only consider fading it once the market gets exhausted into a good support or resistance zone. As far as the econ goes, we have the oil number out at 9:30 a.m. Central Time, and then FOMC minutes at 1 p.m. Central Time. So econ calendar is fairly light today, but given the price structure, the market structure here recently, with the market kind of just tightening up in this range, it is setting up for a directional break one way or the other. So that's going to be the main idea that we keep in mind. But until that break happens, the market is stuck in a range. It is very, very balanced, and it doesn't have to happen immediately. It can continue balancing for a little bit before it breaks, but eventually we will get a break outside of this range, and then whichever way it goes, that's the side that we'll lean on until the market gets exhausted into a good zone. So those are the main thoughts heading into the open. Let's see which side really takes over today, and we'll take it from there.